May profits be upon you. Welcome to another weekly market forecast. This is the revised market forecast. I sent what out. I posted one yesterday, and some news events took place, as is obvious, as you can see on the news screenshot I took. U.S. strikes 3 nuclear facilities in Iran, 4 on Natanz and Isfahan. And this is going to escalate things, and this is going to have a major effect on the my economic forecast. I mean, my forecast for the week, but it's going to have a major effect on the markets, specifically gold and oil, and then the U.S. dollar. Safe havens, like gold, silver, and the U.S. dollar are going to see some surges, and oil prices, because it's in the Middle East, it's just going to have a huge effect. Listen, this week's news, the economic news for this coming week, it's going to be it was going to be a good juicy kind of liquidy kind of week, with CPI data coming out Tuesday for the CAD and the Aussie dollar, the US dollar CAD. I mean the Canadian dollar. I'm sorry. And Friday we're going to have core PCE, which is the Fed's, the U.S. Fed, their main indicator in regards to inflation, and they make their interest rate decisions with that in mind. But this news kind of trumps all of this stuff. All right, the projections that I had in the last video that I just put out yesterday, just scrap that. Okay, just scrap that. We're gonna go with what we have in front of us right now. So let's start with the S&P. The S&P, because it is a riskier asset, all right, you're going to see outflows from investors going from the ES, or from the stock exchange futures, to safe havens like the U.S. dollar, gold, and silver, and also the Japanese yen. So you're going to probably see things hit. You're probably going to see a gap open to the downside, and it'll probably be aiming at these swing lows. All right, because this is where the liquidity is. People who have taken longs, and this will take people out of those longs once price gaps open to the downside. It may go as far as 5809. It may go, but I'm thinking 5905 is definitely within the sights, and we may see a wick down and then a recovery. Now, remember when Trump had announced his tariff wars back in April? You can see the market reaction was crazy. All right, there was this big gap here. All right, on that Monday. All right, it happened over the weekend, remember, and we had a gap open to the downside. All right, and then price recovered pretty fast. All right, came up, came down, then went back up. By when was it? Wednesday, we were trading back within the range we just fell from. All right, we had another period of pullback, and then a full recovery. All right, so I'm thinking we're going to see something similar here. All right, and we may see a wick down and then a recovery, with the gap probably extending from yay to yay. I'm probably thinking that we're going to have that kind of gap down, see what do you call it, clear out of liquidity lows, and then a recovery. Now, it's not going to be that kind of recovery, I don't think, but it depends on how Iran reacts and responds. if there's an indication that during the week that Iran is willing to come back to the negotiating table and everything like that, then we're going to see that recovery shoot up like a rubber band. It's going to come down. It's going to pop. All right. But if they say, they try to involve other allies, neighbors, and Arab countries, Islamic countries, and all, then things could escalate horribly, and this may continue down even to this area of demand at 5759. Okay, where I would be looking for a price to find its footing before taking longs back up. So I'm about sells for now until the news change. All right, till the news changes. All right, if we go to the NASDAQ, we can see the same kind of setup. All right, and my areas are 21,283 and call it 2100. All right, you see the swing low here. You see the swing low here. I'm thinking the gap down comes, and we may see that wick that clears out the sell side liquidity and then continue higher. If it comes down here, this is where I would be expecting a bounce, because there's significant support there. If price does come down here and lingers, it's waiting on a response for Iran and to see if they want to go into a protracted war, or they want to just call it here, start to come back to the negotiating table, not threaten the canal and the Straits of Hormuz, and all of that, not threaten oil and all of that. That's the way I'm going to be looking at it. So I'm looking at some bearishness to come. I gave you the areas that I pointed to, and I'm thinking that we may see a recovery from there, just like I described with the S&P and the Dow. A little more sensitive right now, because look what the Dow has already done. Dow came down to that area of demand, all right, and you see it hit already, came back to that volume imbalance, then made a new high here. All right, and then started to go into this consolidation last week. I'm looking at the gap open to take that swing. All right, and which is also down in this demand zone. All right, and because I like this demand zone, all right, this one not as much as NQs, because NASDAQ, because it actually swept before it ran up, took out the selling candles and overcame them with a gap, with a volume balance up. I like, if price does make it down there, I like this as a stop and a support to bring higher prices. If you go to the S&P, you got the same situation with the gap, with the volume imbalance and all. I'm thinking that this will be a formidable stop and act as support. YM not as much, but I like the low. I like, if we make it to that low, that we may see a turnaround at that point. Once it reaches down here, we may see price turn around or go into some consolidation before it finds its footing. All right. I want to also mention that because there are relative equal lows down here, that makes me not trust it as much. And I say that the Dow is a little more sensitive, because it tends to have more whippy kind of movements than the other two equities. This is the low that I'll keep my eye on here, and that is at 4.2. Let's see. Let me give a good mark here. All right, boom, boom, and that is at 4180 or 4018. Okay. So I'm going to keep my eye on these things. I'm not expecting it to come all the way down there, but I'm keeping my eye on it. What I like to look at is things like this here. All right, we've already traded into this range. We came down, overcame the sell candles pushed up higher, but it wasn't a strong push. You understand? That's why I like this low. So I'm going to keep my eye on that low. Uh, if we get past this low here, we've already traded into that this demand zone. It may be weakened. That low, that we'll see how price reacts once it gets there. Okay. If we go to gold, this is a big one. All right. Gold is going to go up because of the tension. That's what normally happens. It's like a knee-jerk reaction. It's very sensitive to geopolitical tensions and whatnots and the going-ons and geopolitically speaking. Right. All right. We've already taken this high. That happened on Monday of last week. All right, we took that high. I had pointed that out in the previous forecast, and we took it on Monday, but we were bearish since. All right, why? And I was thinking, that's very interesting. Israel is going at it with Iran. The U.S. could possibly get involved, and yet it wasn't moving up. Well, I guarantee you that we may see a doggone gap up and pushing towards the high here at 37, and but first at 34.76. All right, I'm looking for nothing but buys. All right, I'm looking for price to take out the buy side liquidity, and that I'm looking for this push to happen as long as until the point where we see Iran come back to the table, to the negotiating table, to concede, to just say, look, let's cut our losses here. They're going to give some kind of response, and it's probably going to be towards Israel, but it will be, if it's muted, which is what they tend to do, because they've lost a lot of capacity over the last couple of weeks with Israel taking out strategic military sites and all. They may not. They may want to give a face-saving response, but it won't be the kind of response that says, "Hey, let's escalate." Hopefully, that's the case, because if they involve their allies and all, then things could spiral out of control. So, but I am looking for buys. I'm looking for buys, just moving up, and once it gets past here, this will probably be a natural area of demand. All right, and if it comes back there, this will probably be a high probable trade to this high. All right, so bear that in mind. All right, that's what I'm looking at. Now, I should also point out there's an area of demand here. All right, we see the push down. We see this low was protected as it took out this high, created a new high, pulled back. This became our area of demand. Price reacted to it accordingly, and then we created a new high here. All right, and let me clear this up. This creates we overcame the sell candles with stronger buy. This became our natural area of supply. Of demand. I'm sorry. So when price comes back to it, you're looking for a high probability trade to the upside. I'm telling you right now, I think this is going to be a great place to look for longs early as we ride this this event and the liquidity, the juice that it's adding, the volatility that it's adding to the markets. We have to take advantage of it. It's unfortunate circumstances, of course, but we're traders, and this is what we do. All right. We go to silver. I'm taking you to the weekly so you can see what those dotted lines are. We have an area of fair value, right? Price has already last week came and tapped that area of fair value. That's what you want to pay attention to. All right. I like to see if the fair values, the areas of fair value, these imbalances in the market are strong enough. It should take two candles, one, the first contact candle, and the second one to take the low of the previous candle, and then start the move away. All right, and that's what I'm looking for in silver. I am bullish in this market. That I was that way uh, uh, before this event, but because just based on what the structure is showing me. But I was thinking that we may have a bigger what do you call dive in or pullback. We may have a bigger pullback because there's a lot of room for it, back to at least 50%. I don't think we're going to see that 50% with this latest event. So you can see we took we took this low from the 12th of June, okay, on Thursday. All right, that was the week before last. All right, we finally took that low on this past Friday, and I'm looking for a price. I was looking for a price to tap into this low. All right, and then we find support for higher prices. All right, we already took the sell side. We took the sell side liquidity here. Is there a reason to dive any deeper? All right, this bullish fair value gap on the daily has already been used. We used it here. All right, it was already tapped. All right, we don't. I don't look at second taps. Now I'm looking at that low being taken out. So, to prompt buyers stepping back in, we're sweeping sell side liquidity. I'm looking for prices to find support and push higher. This may gap up from here. We may see this target at, hold on, 37.41. We may see that target taken early this week. And where are we going? We're at all time highs, right? So um, there's no telling where we're going. All right, I would be personally, if I'm taking this trade from early in the week, if I'm taking this trade, I'm looking for to trail it with my stop loss. All right, we're going down to oil. Oil bullish. Is that a surprise? No. Let's go to the weekly. What we can see on the weekly, we had this a bullish fair value gap formed last week with the close of last week. You see the respect of this candle from going down any lower. All of this is bullish structure on the lower time frames. We're going to see bullish fair value gaps and whatnot for that support higher prices. All right, we're at the highs of this larger consolidation. We're at the highs of it right now. There's no reason. There's no reason. We swept all the sell side liquidity down here. I'm sorry, the sell side liquidity down here, and you see the impulsive move to the upside. Now I was thinking maybe we might see some kind of maybe a 35% pullback or something, but no, I don't think we're getting that pullback now. I think we're going to see a gap up to these highs here at 82.96. I'm looking to find a valid entry into this market. All right, and that'll happen, on the lower time frames. Of course, if we go to the daily, this again, we got some immediate targets here. All right, the highest one of those at the consolidation is 77.17, but this is the one I'm thinking that we're going to hit, and this is at 82.87. I think there's a good chance we're going up to 82.67. There's other highs to hit beyond that, but we're talking about valid entries into this market and possible acquiescence by the Iranian regime. Maybe we get that what do you call it? The weakish kind of face-saving response from them, and then we go back to the negotiating table. So that'll stop that surge. But right now, there's a surge getting ready to happen, and we're going to see it on the open for sure. So I hope you enjoyed this forecast. I'll see you in the next video.